What's going on, everyone, and welcome back to Explain the Charts. Today, on November 5th, 2025, we are taking a deep dive into Meta Platforms, ticker symbol Meta. The stock has been under immense pressure following its Q3 earnings report about a week ago, so we're going to break down the news and then see what the charts are telling us. Let's start with the big picture on the daily chart. As you can see, Meta was in a very strong uptrend for most of the year, even hitting an all-time high of around $796 back in August. However, that momentum came to a screeching halt at the end of October. The catalyst was the Q3 earnings report, which on the surface looked pretty good with a 26% jump in revenue to over $51 billion, beating estimates. But the market reacted violently to the downside, and it all comes down to two things: a massive one-time tax charge and, more importantly, a huge increase in planned spending. Investors were spooked when Meta announced it was raising its 2025 capital expenditure forecast to between $70 and $72 billion, primarily for an aggressive push into AI and superintelligence. Furthermore, the company stated that spending growth in 2026 would be notably larger still. This rhetoric immediately drew comparisons to the massive, and so far unprofitable, spending on the metaverse, rattling investor confidence. Now, let's zoom in on the daily chart to see the immediate aftermath of that news. Here you can see the action from late October to today. On October 29th, the stock closed at over $751. The very next day, following the earnings call, it gapped down hard, opening below $670 and closing at $666. That represents a drop of over 11%, wiping out nearly $200 billion in market value in one of the stock's worst days in 3 years. Look at the incredible volume on that day, over 88 million shares traded, compared to its average of around 18 million, showing major institutional selling. The selling pressure continued, and in the days that followed, the stock bled out even further. Pulling back to the full daily chart again, we can establish our key long-term levels. The pre-earnings price around $750 now stands as a major long-term resistance level. The bottom of that earnings gap, right around $665 to $670, is the first major hurdle for bulls to overcome. Since the drop, the price has been trying to find a floor. Yesterday, on November 4th, we saw a low of $626, which is a critical short-term support level to watch. If that level breaks, there isn't a lot of clear support until we get down to the psychological $600 mark. Below that, we'd be looking at the consolidation area from back in March and April of this year, somewhere in the $580 to $590 range. So, the price action right now is at a very pivotal point, having fallen sharply and now testing this new potential support zone. Let's switch over to the 1-hour chart to analyze the more recent price action since that massive drop. Here we can see the battle between buyers and sellers more clearly. After the initial plunge, the stock formed a series of lower highs and lower lows, which is a classic short-term bearish trend. However, over the last few trading sessions, we can see the price starting to consolidate and move sideways. This indicates that the intense selling pressure might be exhausting itself, and the price is entering a period of indecision. We are essentially in a range between the lows around $626 and the recent highs around $640 to $645. A break above this range could signal a short-term reversal, while a break below would confirm the continuation of the downtrend. Now, for an even closer look, let's drill down into the 15-minute chart for yesterday's session. On November 4th, the day started with a push down to that critical $626 level. Sellers tried to break the stock down, but buyers stepped in forcefully, as seen by the bounce off that low. The price then chopped around for the rest of the day, ultimately closing near $627. This price action shows a significant fight occurring at this support level. It tells us that while bearish sentiment is strong, there are buyers willing to defend this price. The inability of sellers to push it decisively lower yesterday is a small, but notable, point for the bulls. The battle for control is very evident on this intraday time frame. Alright, Let's switch back to the daily chart to recap and discuss what to look for next. To summarize, the key support level to watch is yesterday's low of $626. A break and close below that level on high volume would be very bearish and could open the door to a test of $600. On the upside, the first minor resistance is the $640 to $645 area. A more significant resistance area is the bottom of the earnings gap around $665, reclaiming that would be a major victory for the bulls. So, what's the outlook? The bearish case, which I'd give a 55% probability in the short term, is that the negative sentiment from the spending news continues to weigh on the stock, leading to a break of current support and a further slide towards 600. This would be reinforced by a weak overall market or further negative analyst commentary. The bullish case, with a 45% probability, is that the sell-off was an overreaction and the bad news is now priced in. If buyers can continue to defend the 626 level and push the price back above 645, it could signal a bottom is forming for a potential recovery back towards the gap fill at 665. For this to happen, we'd want to see increasing buying volume and positive market sentiment. Keep an eye on these key levels and the volume, as they will tell the story of who is winning this battle. As always, this video is for informational purposes only and is not financial advice. Please do your own research and make investment decisions based on your own risk tolerance and analysis. Thanks for watching Explain the Charts, and we'll see you in the next one.